Hey everyone, and welcome back to Talk Tickers. We're diving into Intel's Q4 2024 earnings call today.
Yeah, there's a lot to cover here.
For sure, a lot of moving parts. AI chips, how their Foundry is doing.
Definitely a dense one.
So to kick things off, let's get a quick snapshot of the results. Intel actually beat their guidance this quarter, pulling in $14.3 billion in revenue.
A 7% jump from last quarter, not bad.
Not bad at all. They also beat expectations on gross margin, ending up at 42.1%. And EPS hit $0.13, which is above the $0.12 they projected.
You know, it is worth pointing out their full-year revenue actually dipped a bit.
Right.
But their Intel product segment, that actually saw some decent growth.
Yeah, that's a good point. And speaking of Intel products, Michelle Johnston Holthouse, she's the interim co-CEO and also CEO of Intel products. She made it clear they're in it for the long haul. You know, no quick fixes.
Right.
They're laser focused on three key markets: client edge, traditional data center, and then the AI data center market.
Yeah, she really hammered home that they see a ton of potential in those markets.
Okay, so let's break each of those down then, starting with their client edge business, which basically, we're talking the PC market, right?
Yeah, pretty much.
So what's the state of play there?
Well, Intel is still the top dog in the PC CPU market. I mean, they're powering something like 70% of all PCs out there.
Wow.
But they are feeling the heat from competitors, especially in this whole AI PC space that's exploding.
AI, it's everywhere you look these days. So how's Intel keeping up?
Well, they're not just sitting back, that's for sure. Their goal is to ship over 100 million AI-powered systems by the end of 2025.
Ambitious.
And they're really banking on their new Panther Lake processor, which is supposed to launch later that year. It's built on their Intel 18A process node, which is like their most advanced manufacturing process.
Okay, so for those of us who maybe aren't as deep in the tech weeds, why is this Panther Lake launch on 18A such a big deal?
Well, it's their first high-volume product that's going to be on this cutting-edge process. The 18A node, it lets them make smaller, faster, more power-efficient chips. And that is crucial if you want to compete, especially in this AI PC market that's changing so fast.
So they're betting big on this new tech to give them an edge.
Yeah. For sure. And then 2026, that's when things get even more interesting because Panther Lake will be at full volume by then.
Yeah,
and they're planning to launch their next-gen client family, Nova Lake.
Nova Lake, cool name.
Yeah, and it's promising even better performance and, this is key, better margins for them.
Gotta love those juicy margins. Okay, so things are heating up in the PC world, but let's switch gears and talk about the traditional data center market. What's going on over there?
Their Granite Rapids chip, that's showing a lot of promise.
Okay, good.
Seems like it might help them close that performance gap they've had with some of their rivals. Customers are pretty excited about it from what we're hearing.
That's always good news.
Yeah.
Now, what about Clearwater Forest? I remember we talked about that before. Any updates there?
Yeah, that's their first server product that's going to be built on Intel 18A. It was supposed to launch earlier, but they pushed it back to the first half of 2026.
Why the delay?
Seems like they're running into some complex packaging requirements for the chip. These things, they take time to figure out, especially when you're pushing the limits of what's possible.
That makes sense. Complex tech needs a little patience. Speaking of catching up, Intel's been playing catch up in the data center world for a while now. How are they planning to gain back some ground?
They're realizing they can't do it all themselves. They're really emphasizing re-engaging with the by86 ecosystem.
Meaning?
More collaboration with companies that use their by86 architecture.
So partnerships, a more team-based approach.
Exactly. They're seeing that working together can unlock some serious growth, especially when it comes to developing these semi-custom and custom products for their data center clients.
Tailored solutions. Makes sense. Okay, so we've hit client edge, we've talked traditional data center. Now let's dive into what's really shaking things up. The AI data center market.
This is the battleground right now. I mean, this is where the future of computing is being decided. Intel, they're the leading host CPU for a lot of AI servers out there, but the competition is intense. They're actually saying pretty openly that they're lagging behind in the cloud-based AI data center market.
Ouch, that's got to sting.
Yeah.
So what are they doing to close that gap?
They're learning from their past, which is good. Remember the Gaudi chip they launched? Decent chip, but they learned a hard lesson. Having good silicon isn't enough.
Right, like you need more than flour to bake a cake.
Exactly. You need the whole package, the hardware, the software, the entire ecosystem. And that's why they're making a pretty surprising move.
Ooh, I love surprises. What is it?
They're scrapping Falcon Shores as a commercial product. Instead, they're using it as an internal test chip to develop a much bigger system-level solution called Jaguar Shores.
Jaguar Shores sounds intense.
It is. They're basically hitting the reset button and going all in on this new system. It's a bold move, but it could be what they need to leapfrog the competition.
High risk, high reward.
Exactly. This market moves so fast, you can't afford to stand still. They have to be agile, innovative, and take risks if they want to stay in the game.
Okay, so Jaguar Shores is their big bet. Anything else on the horizon for them in AI?
Well, this is where it gets even more interesting. They've hinted at some really disruptive moves they have in the works. They're talking about leveraging their existing IP, CPUs, GPUs, ASICs, FPGAs, you name it, in totally new ways.
So pulling out all the stops.
Yeah, they see AI as this transformative force that's going to impact everything, from the data center to the edge. And they want to be major players across that whole spectrum.
Makes sense. Okay, so Intel Products is clearly in a major transition phase. But let's move on to their other big bet, Intel Foundry.
Yeah, their attempt to become a big player in the contract chip manufacturing world. Dave Zinsner, he's their interim co-CEO and CFO, had some interesting things to say about it. He's been meeting with potential customers and partners, and the feedback has been positive, apparently.
Okay, that's encouraging. But what are customers saying they need from Intel to really get on board?
It seems like it all comes down to Intel's ability to execute on their Intel 18A process node.
Right, their most advanced one.
Exactly, the same one powering Panther Lake. It's not just about having the technology, though. It's about building trust. Customers need to believe that Intel can deliver on their promises, be a reliable partner.
Trust is key in any business, but especially in something as complex as chip manufacturing.
Oh, for sure. So to build that trust, they're doubling down on IP availability, adopting industry-standard foundry methods, and really emphasizing those partnerships, especially with companies like Tower Semiconductor and UMC.
So collaboration is essential, even in the competitive chip world.
It seems that way, yeah. And it looks like it's working. They have a strong pipeline of potential customers for 18A. Their advanced packaging solutions are getting traction.
Okay, good signs. But let's talk financials. How's Intel Foundry doing on that front?
Well, it's a mixed bag, to be honest.
Uh-oh.
On the one hand, they're already a big player, bigger than almost all the other external foundries out there. They're pulling in about $18 billion in revenue. But they're operating at a loss, and a pretty big one. In 2024, they lost over $13 billion.
Oof, that's a tough pill to swallow. So what's the plan to get them in the black?
Their goal is to reach break-even operating income by the end of 2027. Ambitious, but they're taking steps to get there. Aggressive cost-cutting, shifting more volume from Intel 7 to the more advanced Intel 18A, and just making their fabs more efficient overall.
Sounds like they're pulling out all the stops to improve their financials. But those losses, they are substantial.
They are, but they did get a big boost from the U.S. Department of Commerce.
Right. A huge grant they got.
Yeah, up to $7.86 billion in grants. They've already gotten a good chunk of that, $2.2 billion, with $1.1 billion in Q4 and another $1.1 billion in January.
Wow, that's serious cash. How are they planning to use that funding?
It'll definitely help them reach their profitability goals, gives them some breathing room while they navigate this tough period. But they're not just relying on the government. They're also looking at getting more investments from both strategic and financial partners.
It sounds like they're leaving no stone unturned. So overall, it seems like Intel is making some really big, bold moves, both with their Intel Products division and with their foundry business.
Absolutely. This is a make-or-break moment for them. They've got real challenges, but they're tackling them head-on. They seem to have this renewed focus on execution, getting their competitive edge back, and rebuilding trust with their customers.
They're playing the long game here. It'll be fascinating to see how it all plays out over the next few years. But let's dig a little deeper into some of those financial details and unpack their new segment reporting structure in part 2. Stick with us.
Coming right up, back to Talk Tickers.
We are back.
All right, so we just went through, Intel's strategic direction, both for their products and that, ambitious foundry business of theirs.
Right.
Now let's dig into some of the financial details they gave us during the call.
Sounds good. I'm always interested to see how the numbers actually match up with the big picture strategy, especially for a company like Intel. There's so much going on.
Oh, yeah, absolutely. And their financials are definitely complex, to say the least.
Sure.
But there were some key points that really jumped out at me.
Okay.
Let's start with their new segment reporting structure.
Right. They mentioned that
Yeah.
there are going to be some changes. What's the thinking behind that?
Well, it seems like they're trying to streamline things
Okay.
and give investors a clearer picture of how each part of their business is actually performing. So, starting with their Q1 2025 earnings, there are going to be some pretty big adjustments.
All right. Walk me through it. What's changing?
Okay, so first off, they're taking the edge part of their network and edge segment, NEX, they call it.
NEX.
They're moving that into their client computing group, which everyone knows is CCG.
Right. CCG.
And this makes a lot of sense because edge computing is becoming more and more tied to the PC market.
Right. It's all about everything being connected these days.
Exactly.
Phones, computers, the cloud.
Seamless, yeah. They're also moving their automotive business from that all other category into CCG as well,
Okay.
which again makes sense. I mean, automotive tech, that's a huge part of the tech world now.
Yeah. It's only getting bigger. So they're essentially beefing up CCG to reflect these kind of converging markets.
Exactly. But they're not done there. They're also taking the networking portion of NEX,
Okay.
which includes their Xeon server sales, and moving that into their data center and AI segment, DCAI.
DCAI. Got it.
Yeah,
So they're putting their data center and networking businesses all under one roof.
right. And then lastly, they're moving the IMS equipment business
Okay.
out of Intel Foundry and into all other.
Wow. A lot of moving pieces there. But what's the big picture, the goal of all these changes?
I think it boils down to transparency, clarity.
Okay.
They want investors to be able to easily track how each of these key units is doing
Right.
and really understand how those units contribute to the overall financial picture.
Makes sense. I'm sure investors appreciate that. So new segment reporting, check. What other interesting financial tidbits did you pick up on?
Well, Dave Zinsner, the CFO, he gave some insights into their gross margin trends.
Ah, gross margin, the big one.
The big one, yeah, always key for profitability.
Always. What's the story there?
Well, it's a bit of a roller coaster, to be honest.
Uh,
They expect gross margin to improve from where they think it'll start in Q1, which is around 36%,
okay.
but they're not expecting it to be smooth sailing the whole year.
So some bumps in the road.
Yeah, there are some headwinds. For example, Intel Products gross margin, which was a healthy 51% in 2024, that's actually expected to decline in 2025.
What's causing that? Is it because they're being so aggressive with pricing to compete in the server and client markets?
That's definitely part of it,
Okay.
especially with Lunar Lake.
Right.
That has a higher cost structure because of its integrated memory and packaging.
Yeah, those extras add up.
Yeah.
But at least Intel Foundry's gross margin is supposed to improve, right?
Yeah, that's the expectation.
Okay, good.
Partly because of the shift to EUV wafers and the growth of their advanced packaging solutions. But they did mention that depreciation costs are going up in 2025, about a 10% increase.
Depreciation, silent but deadly.
It is. But even with that increase, they're still confident they can improve overall gross margin throughout the year.
Okay.
They're projecting total operating expenses to be around $17.5 billion for 2025, with plans to cut that further in 2026.
So keeping a tight rein on expenses.
Absolutely.
But what about cash flow? That's the lifeblood of any business.
You're telling me. And Intel, they've been having some issues there. They were free cash flow negative in 2024.
Not good.
Not ideal. But they're determined to turn things around in 2025.
Okay,
Zinsner was really clear that improving cash flow is their top priority.
good.
They've already lowered their gross capital investments for 2025 to about $20 billion, which is at the low end of what they previously guided.
Tightening the belt.
Yeah, and they're expecting big offsets from government incentives and partner contributions, over $10 billion.
Wow, that's a lot. So it seems like they're doing everything they can to improve their cash flow situation.
They are. They're also looking at maybe selling off some of their non-core assets, like Altera.
Right, Altera, they've been talking about that for a while.
Yeah, seems like they're making progress. Zinsner hinted they might have an update on that by the next earnings call.
Okay, interesting. So we've covered segment reporting changes, gross margin trends, how they're controlling costs, and those cash flow improvements.
Yep.
Anything else we should know about their financial situation?
Well, Zinsner also talked about something called non-controlling interest, or NCI for short.
NCI, not a term I hear every day. What is that and why should we care?
Good question. So basically, NCI is the portion of a company's earnings that belongs to minority shareholders of its subsidiaries.
So like a slice of the profits that goes to other investors.
Exactly. And for Intel, this NCI is expected to be around $500 million to $700 million in 2025. But it's going to grow to $1.2 billion to $1.4 billion in 2026.
Wow, that's a big jump. Why the increase?
It's partly because of their SCIP agreements.
SCIP.
Yeah, those are agreements they have with partners to share the costs and profits of some of their manufacturing facilities, those big, expensive fabs.
Right, those fabs cost a fortune to build, so the more wafers they produce in those shared fabs, the higher the NCI.
Exactly. And it's not just SCIPs. The NCI also includes earnings from Mobileye and eventually earnings from Altera once they sell off part of it.
Okay, so it's complicated.
Yeah.
But the key takeaway is this NCI is expected to grow, and that'll affect Intel's reported earnings per share.
Exactly. Investors need to keep that in mind when they're looking at the financials.
All right, so we've covered a lot of ground here talking about Intel's financial picture. But I'm curious, what are your big takeaways from all of this? What's the story these numbers are telling us?
To me, the biggest takeaway is that Intel is in this massive transition. They're dealing with, fierce competition, tough financial challenges.
Right.
And they're making these bold moves to try to set themselves up for success in the long run.
It's like they're walking a tightrope.
Yeah, it's a good way to put it.
One wrong step in.
But they're showing that they're willing to adapt,
Right.
innovate, make tough decisions to get where they want to be.
And those goals are ambitious, to say the least.
Yeah.
Regain the lead in chip design, become a major player in the foundry business,
Yeah.
and dominate AI.
Dominate the future of AI, yeah. They're not shying away from a challenge. And while, there's no guarantee they'll succeed, they're definitely making things interesting.
It's a really fascinating story unfolding in the tech world. Well, that brings us to the end of part 2 of our deep dive into Intel's earnings. But stick around because in part 3, we'll wrap things up by taking a look at their long-term outlook and, of course, our signature This Is Not Financial Advice segment, where we'll brainstorm some crazy trade ideas inspired by everything we've learned.
Can't wait.
All right, welcome back to Talk Tickers for the last part of our deep dive into Intel's latest earnings call. We've gone over their strategic shifts, we've looked at their financial challenges, and we've examined those bold bets they're making. But the big question is, what does the future actually hold for this chip giant?
Yeah, the million-dollar question. Trying to predict the future in tech, it's always tough. But based on what we've heard from this call, it seems like Intel is at a really crucial point.
Would you say it's a make-or-break moment for them?
I think in a lot of ways, yeah. They're fighting hard against the competition in their main markets, client, data center, AI. And at the same time, they're trying to build this world-class foundry operation from scratch. That's a lot to juggle.
Like juggling chainsaws while riding a unicycle. But it sounds like they're really committed to this long-term vision they've laid out.
Oh, absolutely. They're putting their money where their mouth is, investing heavily in things like their Intel 18A node, building those partnerships, and streamlining their operations to be more efficient.
And they've got that huge grant from the U.S. government to help them along the way. That's got to give them some breathing room, right?
Definitely. $7.86 billion is a big boost for their foundry plans. It could really speed up their path to profitability.
So they've got the resources, they've got a clear strategy. What's the missing piece?
Execution.
Yeah.
It all comes down to whether they can actually deliver what they're promising. They need to hit those product launch dates, ramp up production on 18A without any hiccups, and, this is key, they need to win over customers both inside and outside Intel for their foundry business.
Actions speak louder than words.
Exactly. And that's going to be the tough part. The competition is fierce, and the tech world is changing constantly.
High stakes, high pressure.
For sure. But they do have some things working in their favor. They're a global leader. They've got a history of innovation, huge manufacturing capabilities, and a ton of technical expertise.
Plus, they seem to have this renewed sense of urgency, like they're ready to fight.
I agree. They're not going down without a swing, and that's what makes this whole thing so interesting to watch.
It's like a David and Goliath story, but with billions of dollars and the future of tech at stake.
Well said. And who knows how it'll end. But one thing's for sure, the next few years for Intel, it's going to be a wild ride.
Definitely a story we'll be following closely. Well, folks, that wraps up our deep dive into Intel's Q4 2024 earnings call. We've looked at the numbers, we've dissected their strategy, we've talked about the future. But before we go, it's time for our favorite segment. This is not financial advice.
Yeah, just a reminder, everyone, we're just having fun here. This is not investment advice. Please do your own research, talk to a financial advisor, and never invest more than you can afford to lose.
Exactly. With that out of the way, let's get a little crazy. I'm looking at Intel's stock chart here, and it's a company at a crossroads. They're making big moves, but the market doesn't seem to know what to think about it.
The stock has been up and down lately.
And that's where we can maybe find an opportunity. I'm thinking a daring options play. We're going to bet on a huge Intel turnaround by 2027 when their Foundry is supposed to hit break even.
Okay, tell me more.
We're going big. A call option expiring in December 2027. High risk, high reward. If Intel can pull off this comeback, those options could be worth a fortune.
That's a bold move. But hey, you never know, right? Just remember, everyone, this is just hypothetical. We are not actually suggesting you make this trade.
Of course not. For entertainment purposes only.
Always good to emphasize that. But it is fun to imagine Intel pulling off this amazing comeback, rewarding everyone who believed in them along the way.
It definitely is. And who knows, maybe this crazy idea will give you some ideas for your own investing. Just remember, always do your research and invest responsibly.
Great advice.
And that's a wrap on our Intel Deep Dive. Thanks for joining us on Talk Tickers. Until next time, stay curious and keep those portfolios diversified.
See you next time.